Today, we are talking about support and resistance. Now, it's not just, okay, there's a line here, there's a line there. There's a little bit more to it. First, types of support. We're going to go with support first. Now, a support or resistance line, I classify when a stock taps it at least 3 times generally, on a rare occasion two. However, most of the time, to deem it a support and or resistance, usually at minimum it's 2, but usually it's 3. If a stock double tops, that's I guess technically a resistance. Now, what one do I like more? If I had to choose, I would 100% go with flat top breakouts, flat top resistance or support lines. Reason being is there's no discrepancy. Okay, there's quite literally zero discrepancy when it comes to flat tops because it's a price point. It's valid. It stays there. It's consistent. Now, ascending and descending resistance or supports are kind of iffy because there sometimes can be some discrepancies. So when you're looking at breakouts, oftentimes you're going, okay, is it breaking out here or here? Because the angle of the ascending or descending support and or resistance is, can be, there's just human error. There's no human error with flat levels because it's a price point. It's consistent. So first, we have a basic concept. G-Money is not going to help us with this basic concept. Fairly basic concept is when a stock breaks a resistance level, it now deems as a support line. Where do we see this? Well, we see this in micro pullbacks to the upside. Okay, how many times have we seen a stock break a psychological or break a pre-market high and then come back down and retest and have a micro pullback? Well, we see it almost on the daily. In fact, I might be able to show you an example here in just a second. So, for example, JDX this morning, okay, on the 1 minute time frame, right? Resistance was here at 9:30. Has a micro pullback, or sorry, 9:25 was the resistance. So broke through 9:25, right here, micro pullback, and then on the retest it continued higher. Oftentimes, stocks that break out, it broke $9. So $9 was the resistance level right here. Get rid of this line. $9 was the resistance, and then it broke below 9. Micro pullback, validated 9 as a support, and then continued much higher. You see that? See what I'm looking at? Last time I'll say it. Breaks 9, fails to hold 9, goes below 9. Buyers pick up, and now the old resistance now deems a support, and it continues much, much higher. Okay, so old resistance lines and levels can be deemed as support levels. Especially in the 1 minute time frame, we experience these micro pullbacks literally on the daily. So that's why I like adding off of retests. Retests can oftentimes deem as good entry points because of this simple basic concept. Types of support. Okay, so support is not just a price level. Support can be a lot of things. Support can be a indicator. Types of indicators I like to use as support is my 9 EMA. It's my favorite indicator on the 1 minute, on the 5 minute, on the 6 month. Now the EMA is different per time frame because it takes into account the time frame. Now the VWAP, generally speaking, there's almost no discrepancy between VWAP in the 1 minute, VWAP in the 5 minute. It'll stay the same. So I just put VWAP there, and I'm not going to use the VWAP on a historical chart. However, I still use the 9 EMA on the historical charting, and look at this 6 month time frame. Validated the 9 EMA constantly, and as the 9 EMA as the stock price was continuing higher, so was the 9 EMA. Every time it tapped as support. 1, 2, 3, 4, 5. And then what ended up happening was when it broke below it, what happened? The old support now becomes a resistance. Because look what happened. It tried to hold this level right here and flushed. So in the opposite events of when a support gets broken, it now becomes a resistance and it cannot hold. It's just a basic concept, and you see this on the 9 EMA on multiple time frames. Okay, same with the VWAP. That's why when a stock breaks VWAP, that's usually 90% of my entries because it's breaking the resistance. It's breaking out. Okay, and we don't need to go over. If you don't know what the 9 EMA is or what the VWAP is, we are going to go over that probably next week. Now, types of resistances. Okay, so we have descending and we have the flat tops. Now, Descending resistance lines, like I said, there can be discrepancies because when you draw it, you might draw it differently than when I draw it, and then there's so many slight discrepancies. We don't know the exact price of when a stock is breaking out. However, it's good to identify them because we know that descending resistance is indeed relevant. I like flat resistance because there's like I said, zero discrepancy, just like in the support level. And this one, I think the stock was at like $9. It failed right here, failed right here. So heavy resistance in this area. And then when a stock breaks through resistance with an increase in volume, there's an increase in price. Hence, momentum. Hence, breakout traders. Hence, what I do for a living. So this concept, this simple basic concept, is technically what I do for a living. I am a breakout trader. So when a stock breaks the resistance, I am long. It's my simple goal as a trader. Identify the resistance, buy before the breakout, add if it breaks out, continue higher, sell in certain price points. Likewise, when I'm short, stock breaks below support, I hold into weakness, I sell or I buy back into weakness, I add into these pops, and it continues lower. Like right here, this is a prime example. Stock validates this level multiple times. 1, 2, 3, 4, 5, 6, 7 times. Breaks below it, what happens? Tries to get back above that support right here, fails, right here, fails, dumps. Okay, so oftentimes old support lines can become resistance. Okay, it's a very simple concept, yet some people just forget about that. Resistance lines don't have to be stocks that are tapped 3 times. Okay, I know I said in the beginning, ideally I like to see a stock tap something 3 times. However, just so you know, there doesn't have to be a pre-market high that's tapped 3 times in order for me to buy the breakout. So what are some breakouts that I like to trade? High of day. Okay, well, high of day is this one right here. As a stock broke high of day, we can see what happens here. We can see that retest. So breaks out, comes back down, retests, and continues higher. Retests have very high odds of breaking out of the resistance because what do you know about? It's almost like when I think of retests, I think of when if you have a kid, or obviously we all were little kids at one point, and say you're bugging your mom for something. The more times you ask, either what's going to happen, either you're going to get it, or she's going to yell at you and blow up in your face. Okay, so no matter what, you should get a reaction the more times you poke and poke and poke. It's the same thing with retesting on stock. So it pokes, even if it retests 10 times, pokes, and then it eventually goes. However, retests should generally break on the first retest. If a stock fails to break out after the second retest, I start to become a little bit more bearish on it, because what you have to understand is professional traders are going to identify that as a non-breakable resistance, and then are going to start building short positions based off of those levels. And newbie traders are still going to be buying because they're going to be hoping it eventually breaks. However, mostly it won't. So the more times, it's kind of interesting because retests have bullish sentiment to a certain point. If there are multiple retests and they continue to fail, after a point, the more retests that fail, it just signals more and more weakness. So it's kind of a double-edged sword. However, so how I like to do it is the first retest I trade, the second retest I trade with lighter size. Past the second retest, I genuinely don't trade unless there's solid buying on level 2. Because if there's a flat top level, generally that means there's a huge sell wall building there, and I will trade it if it breaks the sell wall, but I won't be adding with anticipation of the break. Does that make sense? So I'm not adding with anticipation of the break. If it retests multiple times, I will wait for a breakout. So that's the high of day break. Okay, so all that means is you map out the highest point of the day, and that is the high of day break. It's very simple, very basic. Okay, now moving on. Pre-market high. The break of the pre-market high is this one. I trade this a lot. So I map out the pre-market high level, and then once it breaks it at open, I trade it. Okay, and there's a lot more to this strategy that we're going to talk about in a few weeks. However, that is indeed a resistance. The highest point pre-market, the highest point at market open. These are all resistances. Okay, and then all-time high. The all-time high break. This is on TUP right here. So I mapped out the all-time high several days ago. I identified that as a resistance. Once it broke the all-time high, I knew it was ready. It was bound for a move higher. However, if I didn't map out that resistance, I wouldn't have known that that was a key breakout level. Another one, VWAP. If it breaks VWAP, That also can be resistance, like we talked about right here. We saw it broke VWAP, validated it, and then continued higher. It's not uncommon for stocks, again, to validate certain resistance lines, deeming it now as a support line. So again, it failed to break VWAP here, comes back above, almost fails to break VWAP, validates it right in this area, and then continues higher. So validation is actually good. Yeah, I don't want to get too deep into this because then I'm going to have to talk about the strategies behind them, which we're going to learn in a few weeks. And then we have the break of the after-hour high. This is just the same thing as pre-market high, except for instead of same day like this one, this was pre-market same day. This was after hours the day prior, and it's still a breakout level. You can see in this one it ended up topping out and acting as a resistance and a good short opportunity, mainly because it pulled on back so far before it continued higher. So I was expecting this to happen. As you can see in this level, it didn't pull on back nearly as far as this one. This one gave back almost its entire move. And in this example, it pulled on back only about 25 to 30% of its move. So breakout was much stronger. In this example, this is still a resistance level. You still have to trade it accordingly. I was waiting for the retest. I actually indeed almost traded this retest, but it got rejected very quickly and continued lower. So to recap this slide, there's a few things. One, okay, supports once or resistance once broken now deemed support. Likewise, supports broken now becomes resistance. We see this in this example right here. Okay, support fails to hold, gets rejected, continues lower. Okay, I don't need to go over all these simple concepts with you guys. These are all active resistances. Obviously, same day, except for all-time high breaks. Oftentimes are same day resistance. Validation, we talked about retests. Validating and retesting are a little bit different, but generally the same concept. So down here, it was a validation, meaning it never broke back below support. You see what I mean? So say VWAP's at $1. It goes up to 110, comes back, tests $1, continues higher. This was a retest, which means it breaks out of the resistance, pulls on back a little bit, and then continues higher. So there's some slight differences here between these two. Validating is a little bit more bullish than retesting because it holds that support. If it doesn't hold that support and retests, it's still bullish sentiment. However, ideally, you'd like to see a resistance once broken deem as a support line. This one never became a support line. It just broke through the resistance. So there are discrepancies between the two. However, they're generally the same concept. They're both bullish signals. Okay, we have to talk about something, and we need J Money's help. Alrighty, advanced concept. Advanced concept. We are talking about psychological resistance lines. A lot of you guys struggle with this, but it's a very basic concept. Okay, what does psychological mean? Well, psychological to me, when it comes to trading, is what do 90% or what do most people think about? The psychology behind their thought process, the psychology behind their trade thesis, the psychology behind the stock market in general. Now, psychological resistance lines is just that. Stocks or levels that people psychologically think there may be resistance. Okay, the crowd may think. Okay, it's all about the herd mentality. Because really, if there's one person that thinks that this should be a resistance, well, that's not really the psychology of the stock market. That's just the psychology of one crazy trader. However, what do the herd believe in? Okay, and that's what we need to understand. Well, there are certain levels that act as resistance lines without stocks even touching them. Okay, how do we even get to these price points, J Money? Well, it's when the stocks break out, they start to test these key levels, hence where I generally either sell or add to my position sizing that we need to know about. So back when I made this, I didn't trade stocks below $5. Now, obviously, I trade stocks below $5 often. So I'm going to have to add another point from a $1 to a $5. I might have to do $1 to $3 and then $3 to $5 because stocks that are $1 to $3, every 10-cent interval seems to act as a small psychological level, especially stocks that are at $1. Now, stocks from $5 to $20, every 25-cent interval. So 5, 5.25, 5.50, 5.75, 6. Every 50-cent interval, 5. 5.50, 6, 6.50, 7. Every $1 interval, 5, 6, 7, 8. Every $10 interval, 5, 10, 15, 20. Okay, I don't know why I didn't put 5 in there. Just skip right to 10. I think I'm at 5. So 5, 10, 15, 20. Note, the higher up the price is per psychology level, the more of a resistance it becomes. Let me explain. 525 is not equally as tough to break as $10. Okay, so when a single digit stock becomes now a double digit stock, we saw that on BJDX this morning. It went from $8 to $9, tapped 10, and then broke through 10. What happened? Finn the Human said it. 10 right to 11. That was a solid breakout. Many people were buying that. However, the $10 break was very important, and it was far more important than the $9 break. However, the $9 break still is prevalent. What I mean by that is when I go to take profits on stocks and it's moving strong heavily to the upside, I like to add and then take profit at psychological levels. For example, we look at BJDX this morning. Where did I add? Well, I added right at $8. When it broke $8, I was bullish on it. Obviously, I was trading the first 5-minute pullback, and the pre-market high was 825. Keep that in mind, 825, 850, 875. You're going to start seeing these psychological levels pop. So 825 was the pre-market high on this one. And as it pulled back down below 8, I added when it got back above 8. Why? Because I know psychologically, a stock regains a whole nother dollar per share is a psychological buying level. So when we see 790, 795, 799, 801, I'm buying into that move because it's breaking that psychological level. And my last price target was indeed $10. But look what happens when it broke 10. Okay? Literally within 1 minute, it goes from lows of 983 all the way up to 1109. So $1.30 a share almost gain in literally 1 minute. 1 minute because it broke $10, and that was huge. That was huge for the stock. Okay, so keep that in mind. Selling at these key levels generally, again, it depends on the price per share. If I'm trading something like, I think Frankie traded EQ yesterday. Right, and the $1 break was very important. This may be the most important psychological level. You can see what happens here. There was some turmoil at the $1 level. First resistance kind of acted as a support. However, $1 was definitely the breakout level on this. Now, $1 is a little bit more interesting than the rest. And the reason I say that is because penny stocks that are below $1, look at this one, MNK, that were below $1 as of recently. When they break $1 a share, that is very huge for the stock. Very huge. Huge. And the reason being is, can I draw on this? Okay, so the break of $1 is probably the most important psychological level known to man, and the reason is now the stock regains compliance with the Nasdaq. You can see that $1 was a very common support and resistance. Failed to hold right here, got rejected, and then this was the breakout level that got retested. And then it retested right here. You can see that $1 was a very active support and resistance. And the reason is stocks have to be above $1 a share to regain compliance with the NASDAQ. Okay, if they don't, then they have to get delisted. Now, if you're like, yo, like, I know penny stocks that are very cheap. Well, yes, they have a period to do so. And if they don't get above $1 a share, what do? Reverse split. MC Pants got it. Boom. So they have to do a reverse stock split. Okay? A reverse stock split means that the price is now, depending on the split, the price is increased while the supply is decreased. Now, if there's an increase in price and a decrease in supply, the value stays the same. It's like, hey, I'm selling 10 loaves at $1 or one loaf at $10. You're still gonna make $10 no matter what. So if you're holding through a reverse split, it's a very bearish thing. If your stock has to do a reverse split, it means that their fundamentals aren't great and no one wants to buy it. So it's a very bearish signal if you're a long term holder. Um, However, for us day traders, it creates great opportunities. Why? Because the supply is now cut down and dwindled. And when the supply is cut and there's an increase in demand, well, what happens? Stock price increases dramatically. So we often trade stocks that are new reverse splits. In fact, BJDX I think was a new reverse split. Whenever you see this on your historical time frame, where it just like instantly jumps up, it's either a buyout or a reverse split. In this case, it was. So this stock went through a 1 to 10 reverse split, which means they were at 60 cents a share, and now they're at $6 a share, but the supply is cut in 10. So if they had a 5 million share float, they now have a 500,000 share float. This is exactly what BJDX had, which means they are now a nano float stock. And they become very choppy and very hard to trade. Why? Because there's so low supply. With even the slightest bit of demand, stock price is very volatile. And that happens. The stock it becomes nano float when they have several reverse splits. Now on the flip side, like Tesla, they do a lot of stock splits, which means their stock price increases or their stock price actually decreases, but your value of your shares stay the same. You just get more shares. That's a very bullish sign for long-term holders. I've never traded a stock that actually has a stock split. They're always reverse splits. But just a little key advice for you guys: if you are trading stocks below $1, just know they're going to have to go through a reverse split at some point or break above $1. So now you understand why the $1 break is so important for these stocks, and at the break and hold it. So if a stock breaks below $1, you can imagine what happens. It's a very, very bad thing when a stock breaks below $1. Okay. But now you guys understand why it is so vitally important and why stocks often find support, like right here, right at $1. 101, baby. It bounced multiple times, continuing higher. So psychological levels are very important for you guys to understand. They give me my price targets. They give me opportunities to enter and exit. You guys need to understand these. You guys, I can't hand these out to you guys like we're in school. I didn't print off enough copies. I'm just kidding. I'm gonna have to edit this. I'm gonna have to add $1 to $5 stocks. But you can find this right in the premium resources if you need it as like a little cheat sheet. However, just being honest, I rarely trade stocks above $20 anymore. But you can see that as the stock price increases, the psychological levels also increase. So, for example, a $100 stock, there's not going to be resistance at $1.20 or $100.25. It's just not going to. There'll be resistance at 125 and 150, but not 1 to 125 cents. And I can't remember the last time I traded a stock above $100. Rarely, maybe like 1 or 2 times a year when a stock goes absolutely parabolic, we'll have that happen. It go from like 10 to 100, and then when it breaks 100, it just goes nuts. When GameStop broke above 100, what happened? I mean, it just went absolutely insane. KOSS, my best trade I've one of my best trades I've ever had. I bought it at 73 for the anticipation of it breaking 100. What happened? Literally broke 100 instantly, 125. You got to think about DWAC, my best trade I've ever had. I also longed it in the 70s. And then what happens? It breaks 100, instantly 175 gets halted going on. And it was my best trade today. So these psychological levels can help you identify where there's going to be clear resistance, where you should be locking in profits, or potentially stopping out. If it fails to hold psychological levels, that's a good time to stop out. Okay, so simple concept. Historical charting resistance. Okay, this is very simple. You guys just have to pull your resistance or your historical charting out past a year. I talked about in a webinar I did. The resistance line that is 1 year out is semi-active, and we're going to talk about that. A stock price that is 2 to 3 years out is not really active. A resistance that is 6 months out is kind of active, and a stock resistance level that's within a few weeks out to 30 days out is very active. Now, you also have to look at the volume when it comes to identifying how important or how big that resistance level is. While the psychological levels are important, if there's not much volume there, it doesn't really matter. because it can break with ease. Okay, but we're not going to go into that rabbit hole. We have that in our advanced concepts at the end of the month, talking about volume-based historical resistance. But just know that historical resistance does indeed matter. Okay, you can see that I got rejected at that old support line. Old supports become new resistances. Now, this was the advanced concept, volume-based resistance. But we want to wait for this when it comes to our advanced concepts, because this is a very advanced concept, and I could do a whole webinar on this. I mean, I did a whole 1 hour webinar on this, I should say. But that's it, guys. Does anyone have any questions for me or Jay Money?